Let's bring on board Mr. Rajneesh Karnatak, who is the Managing Director and CEO at Bank of India. Very good morning, sir. Thank you so much for joining us on ET Now. And actually, let's put the focus right now on the profitability in particular. Your interest expenses have increased sharply, leading to a decline in your net interest income. If you look at the yields on advances was also lower. If you could tell us what exactly led to this scenario and how yields on advances will shape up going ahead for the bank?
Yeah, if you see our results for the 9 months, so operating profit has come down sequentially also, and YOY basis it has improved. So as far as the net profit is concerned, it has improved sequentially and YOY basis. So the net profit has increased by 62% on a YOY basis. On the 9-month basis, it has improved by 82%. Similarly, for the operating profit on the 9-month basis, it has improved, and it had shown an increasing trend of around 14%. So you are correct that the yield on advances has come down because of the simple reason that there is pressure on some corporate advances where the margins are thin, and the cost of deposit has also gone high because of the cost which is increasing in the last quarter, in the December quarter, which has increased. So the net interest margins have come down, but the pressure will not be there in this quarter. We'll be able to protect the NIMs for the simple reason that there is a huge franchise with us, and our CASA ratio is around 44%. If you see our retail term deposit in the presentation, it is also at 44%. So our bulk deposit is only around 12% of our total domestic deposit. So 88% of our deposit being retail term deposit and CASA deposit. So our cost of deposit is on a lower side, and it is below, well below 5% level.
Good morning, Mr. Rajneesh. This is Shrishti also joining in. Talking about your NIMs that have also come down this quarter.
See that our 9-month NIM is at around 3%, at a global level. But if you see the domestic NIMs, it is at 3.3% on a 9-month basis. And for the international, it is 1.4%. So NIMs, whatever they are at the present December moment, so they will be able to protect these NIMs, as I said earlier, that we will be aggressively going for retail term deposits, CASA, with the help of our franchise. So we are having 5,100 branches, out of which 60% branches are in rural and semi-urban areas. Then we have ATMs and CRM, they are another delivery point for us. And then finally the BCs, business correspondents, which are around 19,000. So Bank of India has a strong franchise of around 32,000 delivery points for our customers. With improved customer service and customer experience, we are very much sure that our reliance will continue to remain on retail term deposits and CASA deposits, and less on the bulk deposits, which is only 12% as on December. And with the growing of our RAM book and improving in the overall margins on the credit side, and the reduction in the SMA book, and also in the reduction in the NPA, we'll be able to protect our margins, operating profit, net profit, and also the NIMs.
Right, so let's now put focus on your asset quality, which has actually seen a good recovery if you look at it on a quarter-on-quarter basis, be it the gross NPA levels or your net NPA levels for the matter of fact. And apart from that, your slippages also were low. Can we expect now this sort of a trend to continue going ahead? Can we expect a healthy asset quality going ahead? And what's your internal targets for NPAs, if there are any, and if you can share it with us?
Yeah, so if you see our gross NPA, it has touched at around 30,000 crores. YOY, it has come down on the amount wise at around 8,000 crores. On the percentage terms, we are at 5.35% of the gross NPA, which used to be at 7.27%. So our gross NPA on a YOY basis has already come down by 2.61%. On the net NPA side, our number is at around 7,000 crores. And on a YOY basis, it has come down by 20 basis points. As regards the slippages are concerned, so the fresh slippages during the December quarter was only 1,300 crores, and against which the total recovery plus the write-off was around 2,700 crores. If you see the 9-month basis also, the recovery was much higher than the total recovery, and the write-off was much higher on a YOY basis, on a 9-month basis, than the fresh slippages which have taken place. So as regards the guidance is concerned, so for March 24, we are giving a guidance of around 5.10% for the gross NPA, and at around 1.30% for the net NPA.
And lastly, Mr. Rajneesh, your credit deposit ratio rose to 80%, while your corporate book, 45% of the total book, grew by 8% this quarter. But post elections, the private capex is likely to kick in. Are you well placed in terms of the liquidity for the growth opportunities?
Yeah, so if you see our CD ratio, it was at 79.3% as on December. So where as far as the CD ratio for March 24 is concerned, it will remain nearly at the same level. See, as per the RBI regulations, we have to keep the SLR and CRR. So SLR being 18% and CRR 4.5%, aggregating 22.5%. The ideal CD ratio in that manner, as per the regulatory guidelines, is around 87.5%. So 79 it is 77.5%. So 79% of CD ratio is quite comfortable. This is what we feel. Apart from that, let me bring to your notice that we are having excess SLR also up to the tune of around 30,000 crores. That will also help us for any incremental growth in credit, whichever happens during this quarter also. We have a robust pipeline of say around 50,000 crores as far as corporate credit is concerned, including RAM credit. So there should not be any challenge as regards the CD ratio is concerned, because as I told, we have excess SLR of around 30%, 30,000 crores, and it will help us improve that. And the incremental deposit also, which we will get in this quarter, on both on the CASA side and the retail term deposit side, will help us keep our ratio well below 80% mark for March 24 also.
All right, sir, we leave it there then. Thank you so much for joining us on ET Now to talk about the quarter gone by for Bank of India and where you see it go ahead, and also all the best for the future quarters. That was the management of Bank of India joining us on the show.